We've got Ashish Das of Sharekhan, as well as Sandeep Agarwal, who's Associate Director at Edelweiss Financial Services. I'll come to you first, Sandeep, on the numbers. We've had Anisha break them down for us. That EBIT number looks a little weak, though they have said for the full year they have retained their expectation on the operating margin front. What is your initial reaction to this set of numbers from HCL Tech?
No, so see, this number is exactly a mirror image of what TCS reported versus estimate. They also have a miss of similar 60-70 basis point on the margin, and they also had a good order book. The commentary on guidance, no quantitative guidance, but qualitatively broadly was in line. Order book was in line, and revenue growth was also in line, slight here and there. So similarly, if you see HCL Tech also, despite all the fears of their disappointing in a big way, they have reported in-line numbers. Margin, there is a miss. But again, margin miss akin to TCS is led by attrition. Attrition has gone up by 200 basis again in this quarter, like what happened for TCS. So I think, attrition.
Hello, the voice is breaking. Hello.
You were making a point? Go ahead, Sandeep.
So last 1 month, we have heard that, the startup ecosystem has cooled off. So you will see attrition pulling off little bit from next quarter, not a big change, but slowly things will come under control.
Taken that attrition will come down, and at least that's the word coming in from TCS as well, that even though Q2 might look a bit heavy, at least from the second half of the year, we will see some tapering of attrition. But Ashish, wanted to come to you regarding the deal win momentum, which is coming at $2 billion. And it's looking rather healthy. Does it offset all the fears that the street have regarding demand concerns? Because the key question was, what's the visibility into FY24? Does it get answered by the deal booking being steady enough?
Hi, thanks for having me on your show. You asked the questions about the deal bookings. It is healthy, and it's also in line with the mostly our expectation as well as street's expectation. So now regarding 2024, we need to understand from the management's commentary, like how they are looking at any cancellation or any deferment of the project has been happening. So from this deal wins, we can estimate about what will happen in FY24. So we need to understand from the management viewpoints, like what they are seeing at their clients' end, what are the discussions have been happening at the top management of the clients, as well as what is their view on Europe geography, how the client budget should be there. So these are the factors to be watched out.
Yes, and we'll hear from the management in just 15 minutes from now, and maybe we'll get more clarity around that. But since you talked about geographies and segments, let me bring in Omkar as well. Omkar, as far as the product and platform business is concerned, that has shown a growth of around 5%, and IT and business services has depicted a growth of 2%. And in terms of geographies as well, it's America, which jumped up by 2.8% sequentially, and Europe was also healthy at 1.6%. Is there any internal that you want to pick upon and talk a bit more, especially on the products and platform, because it has been very volatile for the company?
Yes, definitely. I mean, product and platform business looks to be volatile, and it was a big laggard in terms of other services, whereas in IT services, year-end space was basically mainly was doing well in the past few quarters as well. But I am doubtful about the sustainability of the kind of a business that they have. The one should look upon the commentary of the management that what should be the outlook for the Mode 3 business that they have, which is contributor of around 23% of the overall top line. So I believe it's been for the quarter it's been, but in case of the services business and Mode 2 and Mode 1, see if you are saying at 2.1 and 1.8, then there will be where the one can say also that they have not done well for the quarter. I need to see the numbers as well in deep, but what you are saying is supposed to be that taken into the consideration, then that might be a key laggard. However, business scenario looks to be strong, but I believe that the slowdown may cause the delay in the automation part. So one should see also the sustainability of the momentum that the companies are reporting right now.
Sure. So IT and business services at 2% is something that you'll continue to watch closely. But Sandeep, coming back to you, given the fact that stock is trading at 52-week lows and there was a lot of nervousness after TCS reported numbers, do you think the stock will react positively, or do you think it will continue to languish given there are a lot of headwinds that the sector is facing?
So I think, from a stock price perspective, I think correction is broadly overdone. But, because there are still fears of recession, rate hikes and all those things. So there could be some time correction in the stock, which will happen in the whole sector in my view. But I think if you see the phenomenal returns which this sector gives in a 3-year, 5-year, 10-year period, 1-year period, it is very good return. So I think it is good time for investors to start accumulating the stocks. All these companies give good dividends. HCL has given $10 dividend. Most of them are distributing 80-90% of the cash as profit as dividend. So you are looking at more than 3.5-4% yield in many of the names. So it is a very good time to accumulate the good quality stocks. That is the way I look at it.
Right. On that note, Sandeep, Ashish, as well as Omkar, thank you so much for taking the time. Thanks so much for speaking to us. Anisha as well for wrapping all of that up for us. We are awaiting the management commentary. You'll hear all of that live on ET Now. So do stay tuned. We're just a few minutes away from the press conference of HCL Tech to present their first quarter results. Do stay tuned. Lots more coming up over the course of this evening. And this is ET Now.